Trading is never as easy. But who say you can't have fun? In every minute you lend, the more you will enjoy. As you grow up in this industry, you will find yourself and surround yourself with people who will help you to grow up as trader. It's hard in the first place, but I am sure you will be successful. As a trader, always remember trend is your friend.
All right, so we ended last week on a high note. The jobs data, non-farm payrolls coming out better than expected and calming nerves that the labor market was slowing down. Now, if you look at participation rate, if you look at revisions from the previous months, I think the smarter ones of us know that the labor market is slowing down, but the markets right now clearly care about the headline number. They're willing to wipe away any sort of doubt of the underlying data that shows significant weakness to just say, hey, let's just believe it. Let's keep our head in the sand and let's go with it. And if that's what the markets are doing, that's what the markets are doing, and that's what we trade. All right, so this week, couple key things to watch. Number one, later this week, we'll get some inflation data. But the big thing this week, I believe it's on Thursday, there's a 30-year bond auction. The U.S. Treasury will be selling $22 billion in 30-year bonds or treasuries. And the key thing to watch there is what interest rate they go for, aka what the demand for the U.S. long bonds are. That is something that will be market moving later this week. All right, let's flip into the charts here and let's get a gauge on where the markets sit. This was your Friday action. Here was the jobs data release, and you can see the big rally up. Then we kind of faded a little bit on Friday and then rallied into the end of the day. The market's closing up. On the overnight, we saw kind of a fade. The markets were down a little bit in the overnight, but this morning we have inched up into the positive territory, the natural light volume float taking over. All right. So again, there's no real negatives. We didn't see more feuding between Trump and Elon Musk. So again, the markets are calm. There's meetings going on between China and the U.S. on the rare earth and the export-import type stuff, the trade between the two countries. So really, there's no major glaring negatives, and therefore the retail buyers are back at work, floating the market up into the open. Now, a couple things to go over here. If we take a look at the daily chart, a couple things I want you to look at. In fact, I'm going to flip over to the S&P here because the S&P is what most of us will be noting throughout the course of the day. First things first, what do we see here? We see this little underbelly, which is what the high on Friday was. So if we take this here, we can see that this is just a minor level, but it is something that I'm paying attention to as a trader. Notice this baseline here, this baseline right here, and then this area right here, and that's where we hit. Now, this is only a minor resistance on the S&P around 6,020, but again, it was the Friday high, and I am monitoring it to see what happens here if anything big does occur. Now, for me, I've talked about with you guys how we're very close to the all-time highs on the S&P 500. If we look at where we closed on Friday to the all-time high, we're about 2.4% away from that all-time high. Now, in my head, I'm continuing to monitor the cycle. All right, the cycle date that we've calculated out is around the mid-month, so about a week from now. And I'm watching very closely to see, do they push the markets up to all-time highs just into that cycle and essentially make it a rug pull event? So, for instance, imagine we rally in the next week or so, let's say 2.5%. So we're about 2.4% away from that all-time high. They push us just beyond that, which, again, you have a lot of investors that'll have stops on shorts right at that all-time high. And when that breaks, they're going to exit their trade, right? They're going to be done and they say, oh, new all-time high, I'm going to step aside. Then you have other investors that are kind of still saying, yeah, the markets have rallied a lot. I can't chase this market. I don't know if I believe this rally. Once we break all-time highs, the media, the mainstream media and social media will go nuts. They're going to be like, oh, new all-time highs, here we go. And it's going to take the emotion of those people that were on the fence and it's going to push them into the market. Right? Essentially, the markets want to take the maximum amount of people on one side and then reverse the market. Think about it, the lows in April. People were panicking, markets were collapsing, people were getting so bearish, the fear and greed index was at like 2 or 3, and what happened? It was a bottom. So you're trying to get it in the inverse to be at the very top of that. And remember, markets work in extremes. So extreme greed is tops, extreme fear is bottoms. And so again, with this cycle day coming up, I'm kind of playing around in my mind. of how this could all trade out. So in any case, watch this. If we break above here, let's watch that all-time high. Let's see what happens. One other trend line I'm keeping a close eye on the S&P is taking this high and connecting it right through this high as well. High pivot to high pivot, and we're just around there. That'll continue to grind up little by little. So again, just another small little area that I'm keeping an eye on. This one's around 6,040. But again, for me at this point, it's basically the all-time high. I'm watching that one as our major level, understanding that a pierce would be most likely what we would get, aka 2021 on Bitcoin, where it broke just above before the big collapse to the downside. The NASDAQ here, this is the NASDAQ composite. You have a down-sloping trend line connecting through this high here, and this high in February 2025. This would be your short-term resistance, and that again is around just below 20,000 on the NASDAQ composite. The dollar. Now, interestingly enough, we know that we broke below this level. We have a secondary level down here that I think eventually we will go to, but let's take a look at this. So look at this trend line and look at this low and look at what happens when I put a trend line through this. Look at how that becomes basically parallel together. So for me, that's interesting because essentially it shows a parallel channel that we are now trading in on the DXY. And just to show you guys one thing to pay attention to is here you have a parallel channel I'm just doing up on the charts. And if we take this and we say, okay, we broke down into it, we then went up, we went down, we went up, we went down, we went up. And then what's the resolution of this pattern, right? And the resolution eventually, this is a bear flag in technical analysis, basic TA 101 here. And ultimately, this should resolve its way down here. But again, I love the parallel lines here. And so what this makes me think is, I mean, we could bounce up here, we could go here, we could go here. But eventually, the resolution should be that we come back down and break lower. So just keep that in your mind, is that the dollar could chop sideways with ups and downs here for a little while. But as long as we stay within this parallel, this is a bear flag, right? The big down move here, this inside bar action, and ultimately the resolution of that pattern would be most likely to the downside. So again, just keep that on your radar with the two parallel channel lines off of the big move to the downside. The next up is the 10-year yield. 10-year yield is basically flat on the day. So again, just something to keep an eye on here. We do have this right here, which is kind of interesting, right? So again, we have a pivot low. We kind of chopped along this line, broke down, and are now back into that level. There's a secondary level here that I'll be watching as well. So again, overall, yields rallied on Friday because of the strong jobs data. Again, the strong jobs data making it less likely that the Fed will cut rates substantially in the near term, at least because of that headline number. That's what the markets are thinking. But in reality, I don't buy it. I still think rates are going to go lower, even if we go a little bit higher. I think eventually this pattern is going to break lower. And again, the only thing that would change that is if people stop buying U.S. debt, right? So I don't see it as a factor more of the weaker, an economy that is stronger pushing up rates. I look at it more like if rates are going to go higher, it's because that 30-year bond auction later this month or later this week most likely would be very, very weak, which means that you have to basically tempt people with higher interest rates to buy our debt, something that is always kind of in play here. All right, let's take a look at Robinhood. Now, Robinhood, folks, Robinhood was rallying up on Friday, on Thursday, on Wednesday, on Tuesday, on the back of hopes it would get added to the S&P 500 Friday. All right, now Friday after the bell is when they announce any changes in the index, and this stock had been on a tear. The problem is it rallied up so much that essentially it was factoring in being added. And if it didn't get added, it was going to be some selling pressure, right? So essentially investors were front running a potential add. The stock did not get added to the S&P 500, and so today it is lower. But I just want to show this. Like, let's say you didn't even know that it was going to get added or not, and all you did was take your high pivot from the 2023 pivot here, connect it through the high in 2025 February, and look at what you tagged on Friday. All right, and then look at the fall today. Now, listen, it's not a big fall. It's about 5%. It's nothing crazy. But again, I just love showing the beautiful technical trend line there and how you can kind of say to yourself, wow, you know, would I be buying it up here? Heck no, not into that trend line. Even if you thought it was going to be added to the S&P 500, the technical analysis clearly shows that you need to go in the opposite direction or at least sit on the sidelines. And so this is, again, a way when you get hyped, right? So always understand this, guys. This is a big one. So most of us, I shouldn't say we all, most of us have social media. We hear things, the news media talks it up. I saw articles from pretty reputable online sources talking about, oh, they might get added to the S&P. And it creates this like FOMO, right? This fear of missing out. And that's troublesome because that's what will trigger you to buy Robinhood up in this range when clearly if you go to the technical chart is the truth teller, right? And I love that about charts is that charts don't lie. They don't have agendas. They don't have BS. It is what it is. The chart is what it is. And here clearly on Thursday or on Friday, this was bubbling up against a major trend line, extremely overbought. And just to put this in perspective, if you look at this, right, the stock to the high up 165% since April. All right, so it's basically in 2 months, essentially, right? So, think about that. Do you really want to pay 165% higher for after 2 months on something? I don't. I don't like paying up. I don't go to the mall and say, oh, yay, they just jacked up my favorite pair of jeans 200%. So let me go buy a bunch of jeans, right? And always, by the way, that's one of my secrets to asking myself if I want to buy something is I look at a chart and I say, hey, listen, if I was going to the mall, would I go to the mall and be like, oh my goodness, this is so exciting. My jeans are double the price this today at Sears or wherever, it doesn't matter. I guess not Sears, but like JCPenney or wherever, right? Macy's. Let me buy my jeans. No, what am I going to do? I'm going to sit back and say, you know what? I'll wait till they're on sale again, and then I'll buy my jeans, my favorite jeans. Or you go to the supermarket, and it's like, oh, I really would love to get milk, but milk is up 200%, or eggs, right? Eggs are, 3 times their normal amount. Maybe I'll wait a little bit. I don't need those eggs, so I'll wait, and lo and behold, eggs have come back down, right? And so, using the same mentality, it's so interesting how investors, they get coaxed into chasing and paying up for things. When in reality, if they were to go to the supermarket or if they were to go to the mall and buy clothes, they would never, right? I mean, we would think about how illogical that would be. It's like, oh, this favorite shirt of mine, just the price went up 3x. Oh, let me go buy five of it, right? No, we don't do that. So why do we do that in investing? And that's the key, guys. You start asking yourself these questions, you will be a better investor. All right, APP, same thing, was speculated that it was going to be added to the S&P. It did not get added to the S&P. This one didn't have as big of a technical level. Even if we do our fibs here, if we do our Fibonacci, you can see that it wasn't even at a fib level. It was extended short term, but again, for the most part, the Robinhood chart was the obvious one. But same thing, if you could have bought APP down here at like 240, 250, do you really want to pay 400 for it? Going into a potential announcement about inclusion in the S&P? I certainly don't. I'm not going to pay, 75% more. All right. Speaking of overbought, GE Aerospace. All right. Now, this one has had an unprecedented run as if it was the old company. By the way, if you go back to the weekly, this was very similar. Look at these two runs. This was from 1994 all the way up into 2000, the dot-com collapse. And then it had this huge correction. And then obviously it came down way, way, way down. But this vertical move is pretty much identical, if not even more vertical. Now, if we go to the daily chart, this is what I'm paying attention to, right? So for me, at least, I say, okay, you have your longer term trend line here, and we just tagged it. But look at how this stock, basically, this was the only pullback this has had since essentially mid-April. It just slammed into this. If you want to look at something even more interesting here, take a look at the weekly. I think it's the weekly RSI. Look at this. So the weekly RSI had this big high pivot here. Now, granted, it kind of went below 50, but again, lower there. If we go to the monthly, look at the monthly negative divergence here, guys. This has been great. So basically, I guess the point being is that short term, it should pull back, but really the long-term negative divergence on the RSI is what's getting my heads up or my attention, meaning that this is probably getting close to not just a short-term top, but a long-term top as well. And again, that RSI negative divergence, that on the monthly chart, remember, monthly charts are long-term. If you're looking at a daily, you're probably looking at a move that'll occur over the next, 2 to 8 weeks, let's say. If you're looking at a monthly, it's the next 6, 12, 18 months. I mean, it's a long way out. So this, again, this negative divergence definitely gets my attention. You add in this upsloping. Look at this beautiful trend line, how it looks on the monthly chart. right up into here, I'm going to guess that this is close to a major pivot top. All right, stocks making moves today. A lot of the smaller names, the supercomputer stocks, stuff like that, the aviation, drone stocks, Joby Aviation, Archer Aviation, these are all running up. IonQ is a supercomputer, computing stock here. This one is gapping up. Interesting, it's gapping up into gap fill. Again, is this a tradable level? No, not for me, because I've seen this thing squeeze. If it got up to this 49 level, yes, I think probably there I would think about shorting it right up in this $49 to $50 level. But my point is, a lot of these are running today. Most other things are basically flattish. You do have NVIDIA trading up today here. NVIDIA is struggling to get through this little resistance here. If it does, it should go as high as around 49, which would be your next resistance. Now, the only other stock that's kind of in motion here, Tesla is trading down on the day. Notice here, folks, how you came into a lot of support right here, right? So if we look at this zone here, from this low to these highs, that's where you bottomed out. So we're trading back to that level. If this level breaks, you probably come down to about 250, maybe even lower. But right now, again, Tesla is down a little bit pre-market, just more concerns, it's just the aftermath of what's gone on here with the president and Elon Musk fighting it out on social media. And obviously there's going to be negative implications to that. And again, it's one of those things where, the guy, he's a genius, in my opinion. He's a smart cookie. But, in certain ways, you can be smart in computers, but maybe not so smart in public relations, or they say street smart, right? We hear people being not, really book smart, but not street smart. And, he basically went and pissed off half the country, and now he's pissing off the other half. And obviously, there's certain people that will love him forever. But in terms of selling a product, probably not the best thing to do, just being honest. And again, I'm a trader, so I just follow the charts and I'll trade it. But again, we'll see how this all plays out. It certainly is wild stuff to watch. All right, let's go to Bitcoin real quick here, guys. Let's flip over and take a look. Bitcoin began to break down when the stock market broke down, and then the stock market resurrected itself, and this has gone right up. Also, MicroStrategy's Michael Saylor bought another 1,000 plus Bitcoin, I believe, just in the last couple days. So you're getting a little bit of a move up here. If we rally up, this remains as resistance around the 112,500 level, 112,500. Same thing right in here will remain as technical support. And if that breaks, you have this zone right down here. Gold. Let's take a look at gold here. See what we have on that. Gold is basically flat on the day. Notice it did come down on Friday, kind of kissed or closed right on this trend line. Today, it's right on that trend line, inching up just a little bit. My favorite has been silver. Silver continues to push higher. Again, great move on silver. My upside target on silver, guys, is coming up at around 37.60. So short term, we're getting a little closer, but there still should be another $1.30 of upside in silver here. Now, one of my favorites, you guys know, I've talked this one up with you guys. Take a look here. Look at palladium breaking up even more. Beautiful move on palladium. And again, just a thing of beauty. In fact, let me go to my other chart here, because this is the one that I love showing, because you have the trend line, the breakout with confirmation, the retrace to the scene of the crime. That's your buying opportunity, right? So you don't, and this is, guys, just going back to that analogy I used earlier about going to the mall and seeing the prices. Here, the price of your favorite jeans had doubled, right? Or it was up 50%, whatever. Then this is where it's on sale again. That's where you buy. You don't buy here. You wait for at least for me, I always wait for the retrace, scene of the crime retrace. Boom, there it goes. Very awesome, guys. And again, I've been alerting on this chart for the last month or so that palladium was getting ready to run, and it is definitely having its day in the sun. Oil today, let's take a look at oil. Creeping, basically flat, but it is creeping closer to my key level right up here. I am still eyeing it for a potential short. And then natural gas, if we go to nat gas here, it is down after being up on Friday. It's coming back in. Again, for me, it's basically if it gets up here, okay, there's resistance. If it falls, here's support down here, but it's staying basically right in between right here. So I just leave it be. There's no sense in me, trying to make a trade when there isn't one there that at least I am seeing. All right, guys. So listen, this week again, earnings, there'll be a few, I think, Adobe reports, Oracle reports, but for the most part, we're in a quiet period between earnings seasons. Now, once we get into July, earnings will start up again, right? The financials will be in that first half of July, and then tech in the second half. But for the most part this week, watch later this week when we have the economic data, the inflation data, and then obviously the bond auction is probably the most important thing. And then obviously we have to just continue to watch for new trade headlines, right? Are there going to be trade headlines that are going to be coming out? And also we're hearing that Trump is going to be announcing his new pick for Fed chair. He's doing this to kind of weaken Jerome Powell's standing point, right? Because when you have someone lurking in the shadows that's going to take over, you know, you kind of almost lame duck, as we hear that term in political circles. But that is something else that we'll be keeping an eye on as well. For the most part, I'm going to be focusing on the charts. Trade the charts, not the FOMO, not the FUD, not the fear, the greed. Trade the charts and do better. You guys have a great Monday. Thank you, as always, for coming out. I'll talk to you soon. Take care.